Folks, welcome to the Contrarian Trader. Let's do a quick review of the markets, where we stand today, the 24th of January. So far this month, a banner year thus far. The S&P 500 is up almost 5%, while the IWM, the Russell 2000, is up almost 6%. The RTH, the retail holders, that's up almost 6%. So huge gains. However, there are signs of topping. Today, you had the S&P 500 hit multi-year highs, and it stopped at the 1502 level, unable to close above that level. Guaranteed, they're going to try to close this market at or above that level on Friday. Why? It's because it's called short covering Friday. That's what they like to do. But we're seeing signs of topping in this marketplace. Take a look at your chart of the S&P 500. This is a daily chart. This right here is a doji formation. Candlestick chart pattern, very common. It implies that there is a trend reversal that is possible. Not probable, possible. We need to see other things come into play before we become more bearish on this market and willing to invest new funds to the short side. Your volume is still pretty good. However, this rising volume bar here above Wednesday's volume bar is a little bit deceiving. Let's take a look down deeper into the... Before we do that, take a look at your histogram. Let me see the histogram. Very extended. Today, although the markets closed up on the day ever so slightly, your MACD histogram came in with a lower bar. So you have your momentum is losing steam. Your slow Stokes are rolling over. They are now pointing downward. That doesn't mean much. In a strong market, your slow stochastics can come down, double bottom here around the 50 level or the neutral level, turn around, rally right back up. That's a bull market commonality. It's very common. So we'll see if that happens. As of right now, we're just going to watch and wait. I'll be sending out trade alerts to my members and additional commentary as I see this potential topping action unfold in the marketplace. As I mentioned, let's drill down to that 30-minute chart and get back to the volume. As a swing trader, I don't use really the 15-minute chart or the 5-minute chart. It really doesn't behoove me. They're too volatile. Even the 30-minute. 30 minutes good for when you're trying to determine whether or not you're seeing the beginnings of a market that is beginning to break down, or you're looking for an attractive entry point. So let's just take a look at the 30-minute chart, S&P 500. And you can see there was a lot of volume that came in the form of selling. So that made up a good amount of the latter part of the afternoon selling, not to mention this pullback after the morning spike. We did close ever so slightly on the day. We don't like to rationalize volume all that much. It was an up day and rising up volume, which is healthy. That's a sign of a strong market. Being a little bit skeptical is always good as well. Let's continue to the other charts. Okay, what you're looking at here is the IWM, or the Russell 2000. You can see it put it in a topping tail. Not a doji formation similar to what you saw in the S&P 500. However, it is a topping tail. There are sellers up here. That's what that topping tail or shadow, you'll hear some traders call it, that use a candlestick. My guess is that in the coming weeks, you're going to see us come back down, and yes, all the way back down, to fill this gap here at a minimum of 84.61. So what am I looking to do right now? I'm looking to build short position. You can see they managed to defend the 89 level. They did touch on it this morning. They defended the level, yet they were unable to break above the $90 per share level. My guess is that you're going to begin to see the beginning of a breakdown in the marketplace. Does it mean that we're going to a bear market? Not necessarily, no. Absent a geopolitical event, this is going to be, it's a process of correction. You want to see it pull back, attempt to make a new high, fail to make that new high, and then watch it roll over, and then you can begin to add to your short positions, or if you already have a short position, add to that. Let's take a look at the volume bar. volume bar came in above average. They just slow Stokes again. Remember I mentioned on the S&P 500 Stokes how they can come back down to that 50 level, hold, and rally back up to new highs, which is what happened with the IWM. And you can see how the slow Stokes are rolling over. MACD is very, very mature, very, very extended. And you can see that although the stock closed higher on the day, over 1/4% higher on the day, you could see on your MACD histogram. MACD is a lagging indicator when you use the lines. However, when you use the histogram, it's a better visualization of how a stock, an index, a commodity, whatever you choose, is beginning to lose steam. And that's what you're beginning to see. Williams percentage R, very, very overbought. And frankly, for an index, 75 on the RSI, it was 76, I believe, last night, is fairly high. Let's move on. Okay, the retail holders, what a topping tail this. This is a pure sign that you need to look to book some profits. There is a lot of resistance up here. There are sellers above, meaning they're satisfied to take their profits and have 47.50 be their price target to get out. So please be careful here in this market. When you begin to see these topping tails, these shadows, you need to be careful in a market like this that is so extended. What you're seeing right now are shorts. They're being squeezed, as you're seeing with Netflix. Any number of stocks, they're being squeezed right now. Your higher beta, lower earnings stocks are being squeezed. You saw it with ESI today. That's an educational stock. It's a junk stock. However, that rallied today. Netflix rallied today. Piss poor earnings. However, the stock is heavily shorted, and the shorts are getting squeezed out of it. And that's what you're seeing. That's the sign of a top. Besides the fact that you have the retail investor rushing into this market, which is always a clear sign of the top. Good volume on the RTH, but when I say that, keep in mind, there's a lot of sellers. Let's take a look at that intraday chart. Okay, what you want to take a look at is after you had this pullback to the 46.14 level, that's your new line in the sand. That should be your, if you're buying the RTH or you bought it today, you see a breakdown below 46.14, as a trader, you need to be stopping out. Get out. Especially if it rallies in the morning and fails to take out 46.50. Again, if it rallies in the morning or if it gaps down in the morning, you need to get out of this trade, if it is in fact a trade, because the RTH will have put in a lower intraday high. That's a clear sign of sellers are coming in, getting a little bit desperate to get their money out. They want to book profits, especially ahead of the weekend. Why else should you be careful? Take a look at the VIX. We are trading at multi-year lows. Now, back in 2006, 2007, did you have a VIX trading for 2 years below 10? Yes, you did. Can it go down there again? Absolutely. However, this is not the norm. It's the exception to see the VIX trading down this low. When the VIX is low, you got to go, meaning you got to start scaling back on your trades, on your longs. When the VIX is high, you have to buy. So, given that we have a VIX that closed today with a market that was up, that's a divergence. Usually when the market's up, the VIX closes down. The VIX closed up 1.85%. The S&P 500 closed flat. The Russell 2000 closed up 0.33%. That's a divergence. So you may be saying, you know what Bobby just said, you have these shadows or topping tails here. Isn't that a sign that people are dumping volatility? Yeah, but you have to remember something. This is the volatility index. It's very, very volatile. So you can only put so much weight in on these topping tails, bottoming tails, whatever the situation is. Look, you saw back here, huge key reversal. 3 days later, the VIX was off to a new rally up to 23.23, despite this key reversal. And you had a couple of key reversals in the same month. Yet the VIX, by the latter part of December, was trading above 20. All right, so please keep that in mind. The VIX is very volatile. That's why they call it the volatility index. Okay, so what will be the catalyst for a sell-off? Who knows, really? It could be a geopolitical event. That's my guess. Nobody's expecting anything right now. That wall of worry that was there in December is gone, as you can tell by from looking at the volatility index. So what will the catalyst be? Not quite sure yet. However, when you take a look at the U.S. dollar, remember, you have revenue growth of companies that are accelerating. However, earnings are not that wonderful. Yeah, of course, they're beating the street by a penny. They're coming out with statistics stating that 70%, 60% of all companies are beating their estimates. Yeah, they're lowered estimates. So when you take a look at the U.S. dollar, which has since 2002 traded inversely, as sick and perverse as that is, I always say it for my numbers. The U.S. dollar trades inversely of the overall stock market. Take a look at the S&P 500 here. It trades inversely. As the U.S. dollar has corrected, S&P 500 has taken off. As the U.S. dollar rallied, the S&P 500 broke down. It's due to the fact that our exporters, when they export a good overseas, a lower U.S. dollar makes their goods less expensive overseas, therefore they sell more product. However, you have the Japanese that are in a currency war right now. They're devaluing their yen. Their government is quite vocal about it. Take a look at the FHY, the beating that has taken. We'll come back to the U.S. dollar. This is the Japanese yen trust. Look at this. Absolute beating, disaster. By design. The Japanese government wants this because they're an exporting nation and they want to make their goods less expensive overseas. So if you take a look at your dollar, it's holding in a pennant formation along that lower band, very good consolidation. Once we get a breakout above this upper band of the declining downtrend line, you're going to begin to see cracks in the market. Can they rally a few days together? Sure, absolutely. However, watch the advanced decline line on the S&P 500 and the Russell 2000. See if that's confirming a move higher in the market, or are there less stocks that are helping push the markets higher? Those stocks that are making new highs, are they quality stocks or are they the garbage stocks? That's what usually happens at the top of the market. The garbage stocks usually tend to lead. High quality stocks, a la Apple, begin to break down. It's just a cycle. It always happens. It's a process. So watch for the U.S. dollar to break out above this upper band here. Expect a pullback. My guess is it'll consolidate at the top of this line and then take off because there is a currency war. Could that be our geopolitical event? Let's hope it's that calm and not something serious like a terrorist event, God forbid. Last chart, FXC, Euro Trust, beginning to see signs of a top here. See this topping action here at 133. Past several days, you're in this price channel between 131.50 and 133. Let's see what it does. If you get a breakdown below 131.50, probably going to be a nasty sell-off. Your up volume bars are beginning to decline. And if the euro breaks down, that means that your U.S. dollar is rallying. They trade inversely. Money flow is looking actually pretty good. So it may not occur tomorrow, but watch early next week. Take a look at that intraday chart. Not much to write home about. A little bit of topping action in here. However, it's holding. It held intraday today, 132.60. Let's see if we get a breakdown. Here's your line in the sand right here, 131.62. Breaks down below here. That means the U.S. dollar is soaring. Probably means the U.S. stock market is beginning to correct. And that's it, folks. Members, Watch out for my trade alerts. I'll be sending out more commentary on the overall markets, what our game plan is going to be, and what positions are long. We're going to look to scale back on in advance of what I believe to be is a beginning of a market top. And that's it, folks. Okay. Have a great Friday. Use your stop loss orders. If you have any questions, even if you're not a member, shoot me an email. More than happy to answer it for you. If you're watching this on YouTube, please subscribe to my channel, leave a comment. If you're watching this on my blog, like me on Facebook. I'd appreciate that. And that's it, folks. Have a great, great Friday. Use your stop loss orders. Have a great weekend. Talk to you soon. Bye-bye.